already. She's the founder and CEO of US Tax and Financial Services. She's been in the business for a very long time. Her company was set up 25 years ago, and she's going to talk to us about FATCA, the implications for European managers. Let's welcome her. Thank you.
Thank you. Thank you. I'm actually very surprised. I'm the last speaker, and there are still people here. And it's all about FATCA. So y'all, hats off to every one of you for staying. Thank you. We're basically a firm of American and British tax accountants and lawyers, and we specialize in tax. So we're just kind of U.S. tax geeks. I can't think of a better word for it. But anyway. One of the biggest issues that I think FATCA has had is not necessarily just the banks, but also the fund industry and the trust industry, because you're dealing with various entities who are either your investors or your beneficiaries or settlors. Anyway, what I wanted to do was I couldn't begin to tell you how many people I've spoken to on the fund industry side, and there's a huge amount of misinformation. And people, I don't think, are really understanding exactly why you need to do something and why you need to snap out of it and really come to the plate and understand that there is something you need to do. Whether you have American investors or you don't have American investors, whether you invest in the United States or you don't invest in the United States, the banks who are handling and clearing all of your trades, and I'm assuming there are banks that are clearing all your trades, are going to be requesting information from you with regards to FATCA. So you're either going to be FATCA compliant or you're not going to be FATCA compliant. And so you need to understand, and that's a decision to be made, and it's not a light decision to be made. So who's affected? Do you plan to comply? Methods for becoming compliant, FATCA compliant. How do I register it, and what's my time frame? Now, FATCA is all about dealing with the IRS, and I think any time you sit down and start dealing with the IRS, I think it's important that you actually understand who the IRS is and what they're all about, okay? The IRS is the part of the U.S. government that has actually been empowered to collect taxes and to enforce tax law. They don't pass tax law. Congress passes tax law. And Congress passed the tax law under the part of the HIRE Act in 2010, this Foreign Account Tax Compliance Act. Now, this is the first time, okay, since I've been dealing with tax since I don't want to go back into it, but back in the 80s when I first started dealing with tax, U.S. tax law. It's the first time I've come across any piece of legislation where the IRS actually gave, not the IRS, where Congress gave the IRS the ability to actually negotiate with foreign governments agreements. Normally, treaties are all agreed by Congress, okay, and signed into law. This is not the case with FATCA, which is why you have some banks, let's say the bank, I don't know if you've read, but the Bankers Association in Texas and the Bankers Association in Miami has sued. They've issued a lawsuit against the IRS because they believe that they are going to be losing $78 million worth of assets under management. Now, when you think about that, that's probably got to be the most ridiculous piece of lawsuit I've ever heard, because there's an awful lot more than $78 million worth of money in the United States by foreign nationals. In fact, I think the United States probably has more black money in it than any other country in the world, okay, undeclared money. And this is something that FATCA, believe it or not, is going to deal with in a very effective way, because under all of the IGA 1s, the Intergovernmental Agreements, version 1, there's a reciprocity. The IRS hands over information, you know, the IGA 1 that England signed with the United States government. England hands over details, or all the banks and the financial institutions hand over details of all Americans who have accounts in England, or investment accounts, whatever, in England. They hand that over to the IRS and the details. The IRS then hands over information on all of the people living in Britain who have accounts and investments and stuff in the United States. And in the United States, U.S. tax law, every single brokerage account, bank account, partnership, hedge fund, you name it, is on an annual basis sending information to the IRS to say these are the investors who own this money, and who have this amount of interest income, dividend income, or whatever it is. Now, all of the U.S. banks have a W-8 BEN that says this is a foreign nationals account, and it tells them, okay, these guys live in England. Okay, so they're entitled to the U.S. tax treaty, and no tax is withheld on interest and nothing on capital gains, and there's tax withheld at the 15% rate on dividends. But that information, the name, the address, the value of the account, all of that information, the income, the dividends, the gains, the losses, whatever, all that information is now going to go to England to say, here you go, England. Here's a laundry list of all of these people who have accounts who live in England, who have accounts in the United States and have investments in the United States. So it's a reciprocity thing going on here. Anyway, understand the IRS. Now, the IRS, you've got 90, how do I do this? You've got 91,000 IRS employees. 88,000 are full-time, and 13,000 are revenue agents. Now, these are the ones who actually do the audits and review returns. Now, there's 793 million returns that are filed, and there's only 312 million people who live in the United States. And in the United States, that number of returns generates 2.4 trillion worth of revenues. Now, there's 7 million Americans who live abroad, and believe it or not, Americans, no matter where they live, are subject to U.S. federal income tax, and if they are earning money over $10,000 a year, they have to file U.S. income tax returns. They don't care what country you live in, what regime you're under, it doesn't matter. You're an American, that's the cost of your little blue passport, and by the way, less than 10% of the American population actually have little blue passports. So holding a passport or not holding a passport does not denote whether or not you are subject to U.S. income tax. If you were born in the United States or one of your parents was born in the United States, you're going to be subject to U.S. income tax. So it's very important here. 7 million, only 465,000 of those 7 million actually file returns. So you have 6.5 million Americans who are living outside the United States who are not filing U.S. returns. Okay, so keep that in the back of your mind. 6.5 million non-compliant U.S. tax returns, taxpayers. You look at the number of criminal cases handled by the Department of Justice. Now, 793 million returns are filed, and there were 5,000 returns that were investigated by the Department of Justice in 2011 or 2012. Prosecutions, 3,700, and about 2,466 actually went to jail. So out of 793 million, what do you think your chances are? Pretty slim, I'd say. The 38,000 people who came through under the various voluntary disclosure programs raised $5.5 billion worth of revenues. 38,000. Now, didn't I just say that there were 6.5 million Americans who are living abroad who aren't filing U.S. returns? Do you understand why FACTA is important to the United States government? It's not just dealing with Americans living abroad. The majority of those 38,000 people were actually people living in the United States who had accounts abroad, and they were not being reported. Okay? So now that you get that into perspective, you can understand why the U.S. government, I mean, let's face it, the U.S. government needs money just like everybody else. You know, we've got a lot of wars to pay for. Anyway, I'm sorry. My political bent is a little off the chart. Anyway, with regards to these various voluntary disclosure programs, like I said, 38,000 people who came forward under the various voluntary disclosure programs raised $5.5 billion. In 2009, when they started that, by the way, voluntary disclosure has been going since 1948. You've probably all heard of Al Capone. He was one of our most famous criminals. We couldn't catch him because he was killing people, but we were able to catch him because he wasn't paying his taxes and reporting his income tax. And that's how we get a lot of drug lords, I guess, who are put into jail. But anyway, that's part of the U.S. system, and that's how we roll. Anyway, the Foreign Account Tax Compliance Act, again, it was designed to combat offshore tax evasion. I got to keep up with where I'm going here. Designed to combat offshore tax evasion and target noncompliance by U.S. taxpayers with foreign accounts. Okay, they're estimated to have $100 billion annually worth of income that's not being reported. Now, I don't know how realistic that is, and I'm not sure exactly how they came up with those numbers, but it's enough to make Congress stick behind FATCA and continue to push this thing forward. The biggest issue is the entities, the structures that Americans have offshore. The warm bodies are a little bit easier to deal with, but it's the offshore structures that they're having a hard time with and trying to figure out. FATCA does not impose new taxes. It uses the threat of financial penalty, 30% withholding, to force foreign entities to be more transparent. The primary challenge is how do you force these foreign entities who are not subject to U.S. tax laws to disclose information that relates to strictly to U.S. persons. Well, the IRS thought, well, we'll come up with a 30% withholding tax on U.S. source investment income held by foreign entities, including gross proceeds from the disposal of investments that could give rise to U.S. source investment income. Now, each one of you guys are dealing with funds, right? Now, let's assume that you don't have any American investors, but yet 20% of your portfolio is actually invested in the United States. Stocks and bonds, just, I don't care what it is, it's traded on the U.S. markets. 30% tax withheld on the sale price. What's that going to do for your rate of return? Definitely a real problem. So you're going to want to seriously consider whether or not you are FATCA compliant. If you guys are investing in the United States, you definitely want to be FATCA compliant. Now, how difficult is it? A foreign entity will not be subject to the 30% withholding tax if it voluntarily cooperates with the IRS to find U.S. persons invested in foreign entities, or if the fund actually becomes FATCA compliant. So FATCA compliance, its impact on funds. Fund managers need to deal with being FATCA compliant at the fund or investment level and also at the investor level. Okay? Foreign funds and investment entities must become FATCA compliant if they invest in U.S. investments or if they have U.S. investors. Makes sense. U.S. funds and investment entities, on the other hand, okay, do not need to take formal steps to be FATCA compliant, but because they are U.S. funds and U.S. entities, they are already dealing with U.S. legislation, and they're already reporting all of this information on every single owner, on every single asset, dividends, interest, capital gains, you name it. The U.S. law requires U.S. funds to provide the IRS with the same degree of transparency as foreign funds with respect to U.S. investors. However, under U.S. tax law, they will be required to withhold on non-FATCA compliant investors. So that's very important, especially if you've got a fund of funds and you're actually investing in U.S. funds. Those U.S. funds are going to withhold if you're not FATCA compliant. And in order for you to be FATCA compliant, you have to know and understand who your investors are. And you've got to drill down, not necessarily all the way to the warm body, but you're going to have to drill down to who your investors are and whether or not they are FATCA compliant, non-compliant, exempt, or otherwise. So at the investor level, both U.S. and foreign funds and investment entities must formally document their investors as being FATCA compliant. Okay? Non-compliant, exempt, or otherwise. And again, like I said, the rate of return will be definitely hurt if you have non-compliant or recalcitrant investors. Okay, methods of becoming FATCA compliant. You enter into an FFI, Foreign Financial Institution Agreement with the IRS, or you comply with requirements under the IGA, the International Government, the Internal Government Agreement. Switzerland signed an IGA too. They agreed to direct and enable all locally domiciled funds. I'm not keeping up, am I? Apologize. Switzerland signed IGA 2. They agreed to direct and enable all locally domiciled funds to enter into an FFI agreement with the IRS and to report information about U.S. investors investor accounts direct to the United States, to the IRS. Swiss investment advisors and or investment managers now qualify as FFIs and are deemed compliant, but they still have to register. Okay, what does that mean, register? Publicly traded funds are also typically deemed compliant institutions, and they may or may not have to register. It depends on what the situation is. A foreign fund entering into an FFI agreement will become a participating foreign financial institution. Okay? That means you have to nominate a responsible officer. One individual, and we're not talking about a low-level individual, you're talking about senior management level individual, is going to have to agree to become the responsible officer. And once a year, this individual is going to have to sign off to say that you're doing everything that you need to do under the IRS regulations to be a participating foreign financial institution. And more than likely, as a participating foreign financial institution, you will have to hire someone like ourselves or Ernst & Young or KPMG or Deloitte Touche to actually certify that you are actively complying with as a participating foreign financial institution. Okay, so it's kind of like the QI legislation. Are you familiar? Y'all are familiar with the QI legislation? That's where they made you actually obtain signed W-9s and signed W-8 BENs from all your investors, signed W-8 IMYs, etc. Anyway, so name and nominate a responsible officer. Obtain information on each investor and determine whether the investor is a U.S. person, a recalcitrant. Uh-oh. Hello? Did I do something? Yeah, okay. I know it's the information, right? Okay. Obtain information on each investor is probably the most difficult thing. Okay, that's it. I don't think we have, oh, we do have it. It's there. A U.S. person, recalcitrant, non-participating foreign financial institution, or if they are exempt. Now, I was talking to a fund manager at the break, not at the break, at the lunch hour, and I was asking him, I says, okay, so how many investors do you have? And he says, well, we've got 40, and they've got about 400 million under management. They've got 40 investors. So those 40 investors, I says, how many of those investors are pensions? And he said, okay, well, 4 of them are pensions. Okay, I says, okay, those guys are exempt. You're going to get a signed W-8 BEN E from each one of those entities. It's not a difficult task. And I says, so that's easy, that's 4. I says, now what else do you have? Well, JP Morgan is an investor. I says, well, JP Morgan, you can probably rely on the W-8 BEN E that says that they are a participating foreign financial institution. I says, you go through each one of your investors. Now, how long is it going to take you to go through 40 investors? This is not astrophysics, and it's not something that should take more than a week or 2 weeks for you to actually deal with. So when you're sitting down and thinking about FATCA, and you're thinking about becoming being compliant, it's not this huge elephant in the room. Okay, when you actually sit down and look at it. Now, yes, it is an elephant in the room when you're talking about being a bank. And it can be an elephant in the room when you're talking about, some seriously huge funds where you've got 1,000 investors. But for a lot of the funds, it's not a huge elephant in the room. So it's not something that you should actually run away from or ignore because time is running out. Okay? So obtain the information on your investors. The FFI agreement. Adopt a compliance program. Make sure you understand what needs to be done on an annual basis to comply. Annual report specific information on accounts held by U.S. and recalcitrant investors and payments subject to FATCA reporting made to investors who are non-participating foreign financial institutions or recalcitrant. Now you sit back and you think, okay, I have no U.S. investors. We don't invest in the United States. We concentrate in the German market. So why do I need to be a participating foreign financial institution? Well, the answer to that is you don't. You don't have to be. But you do have to know who your investors are because each one of your investors are going to have to sign a W-8 BEN and you're going to have to sign your own W-8 BEN because the bank is going to require you to sign a W-8 BEN-E that says that you are a non-participating foreign financial institution. That W-8 BEN-E, which is a form, it's no more than 1 page. Well, actually, it's a lot more than 1 page now. It's about 5 pages. There's an awful lot of questions on there for you to answer. Okay, so it's not something that you take lightly, and it's something that you actually look at and get some advice on. Yep, so it's just a word to the wise, guys. Withholding 30% on withholding on payments subject to the FATCA rules. This 30% withholding, if you get that W-8 BEN wrong, and you were the one, your entity, your fund, was the one who was the withholding agent, well then, and the IRS believes that you should have withheld and you didn't, well, the money comes out of your pocket, okay? Money comes out of your pocket. Even if it's 2 or 3 years down the road, the money's going to be coming out of your pocket. So this is not something you take lightly, okay? You pay attention to what you're doing, and you withhold where you want to withhold, or where you should be withholding. Evidence of FATCA status. Each fund investor must be properly documented in accordance with the IRS regs. Okay? A withholding agent may not necessarily rely on its good faith belief that an individual or entity is foreign or U.S., that an entity is FATCA compliant, or that an investor is an exempt beneficial owner. Let's say you have an individual. I have 3 passports. I could sign a W-8 BEN and say, I'm not an American, I'm a Brit. I've got a British passport. But it also says on my British passport that I was born in Chicago, Illinois. So there is U.S. indicia. Each one of you have to actually take on the role of looking at and paying attention to those W-8 forms that are coming out and coming to you. You can't just rely on what the individual is saying. There is some checks and balances that you have to go through, and it's very well documented by the IRS as to what you need to. The IRS regulation details instances in which forms claim must be treated as unreliable or incorrect. And what they're looking for is U.S. indicia. Funds have to perform due diligence on these forms to ensure they are accurate and can be relied upon. Foreign funds and their foreign entity investors need to register with the IRS and obtain a global intermediary identification number. This is a GIN. I think you've all heard that word before, which must be verified with the withholding agent. Okay, each of these foreign funds, you may or may not be a withholding foreign partnership. You're either a withholding foreign partnership or you're not a withholding partnership. If you are, let's say you're clearing all of your U.S. trades through Brown Brothers Harriman, okay, they would be the withholding partnership. And therefore, they would require a W-8 IMY from your fund. And since you are, you're a non-withholding foreign partnership, you have to look at all of your investors and give them. Brown Brothers Harriman is going to require a W-8 BEN or a W-9 or something from all of your investors, okay? And that will be attached to the W-8 IMY that you're giving to the withholding agent, okay? If you're doing your own withholding and you're taking responsibility for that, then you don't have to give anything to Brown Brothers Harriman. But U.S. FATCA. Account means what's a U.S. person? And I think this is probably one of the most important things. A U.S. person, how do you know, is not just a warm body. You have to eventually get down to the warm body, but effectively, I got to get going here. Chop, chop. A foreign entity, foreign corporate entity, where you have 10%, a corporate entity where you have 10% value or vote is American, is owned by Americans, that entity is considered to be a U.S. entity, a U.S. person. And you've got reporting requirements with regards to that. Same thing with partnerships, trusts, it's a whole different ball of wax, and I won't go down to that. I have left for you a decision tree for individuals, another one. This is a copy of the W-8 BEN, at least just the first page. You have 28 different choices as far as entities, and those 28 choices have been I don't think that, it's still a draft form because the IRS is still negotiating intergovernmental agreements with various countries. And every time they sign another intergovernmental agreement, we have another option here, because this is where everybody comes forward and says, okay, we believe that we should be exempt. And so they put it here on the W-8 Ben form. I've given you a decision tree also for foreign entities. And how do you register? The registration, you can just do it online. It's not a difficult registration, but I suggest you actually print off the Form 8957 and look at it, and then give me a call and we'll discuss it, because there's a lot of questions on there. It's not just a one-page form, okay? And then there's a timeline as to how and when and the time frames that you need to deal with. You can actually go online today and sign your, and prepare your application for becoming a participating foreign financial institution. But the IRS will not give you a global intermediary identification number until January 1. And the withholding is going to be take effect June of next year. Okay? Anything else, ladies and gentlemen? Questions? Thoughts? I think y'all want to go home. Yes, sir? Did you have quick?
You're very lucky having 3 passports. If you kept one, which one would you keep?
The American. Sorry.
Okay, well, I think that concludes the day on a high and interesting note. For those of you who haven't gotten one already, there is a bag waiting for you with a Victorinox knife. Please don't forget it. I think we want to thank, again, the Canton, Kurt Zibung, Roman, Edith, for all your hard work. Thank you very much. Like last year, the takeaways here are huge. We've covered so much: tax disputes, Swiss values, innovation in Switzerland, or the lack of it, so bear that in mind. A potentially divided banking industry and asset management industry that might get together and show more leadership to preserve itself. We've talked about FINMA, its issues, its the point about tax on capital markets, the stamp duty, which could be something that people could lobby for a change. Talked about more tax issues around the prisoner's dilemma. The good news was that investment in hedge funds was still seen as something positive. We've heard through the awards about all the fund of hedge funds and single manager that have won in their respective categories. We've heard about a potential Fed rate rise. We've heard about how VaR is calculated and what that might mean about the impact on investments. We've looked at the issues that we're facing in terms of potential financial stress, in terms of democracy, so we've really covered the whole spectrum. I mean, what a day it's been. I think I'll certainly have a lot of thought after tonight. I wish you all a safe journey back home, and thank you very much.
Finance Conference Canton Schwyz, presented by the following main sponsors: UBS, Interaction, Swiss Life Asset Managers, Ernst & Young, Drooms, Novus Partners, and the following co-sponsors: Schweizer Kantonalbank, Wirtschaftsförderung Höfe, Matic Suter & Partner, Business Network Club Zürichsee, Marketing Business Center, a company of Regus Group, Etzel Real Estate.